Let's continue, guys. I don't know whether Precious, because I forgot to record the session, you can explain this one again, or I should leave. Let's summarize the.
You can continue.
Okay, I can continue.
Yeah.
Okay.
We have 4 minutes, so if you guys get locked out, please join again.
Okay.
Okay, guys. Yeah, guys. There's an investment, we made an investment on the 1st of March with the last national bank at the 12% per annum. We're going straight to our trial balance, guys. The investment is here at which percentage? 12%. Multiplied by 14,000 by 12%. How much we get, guys?
Please repeat again.
When you we made an investment of 14,000 with last bank at the interest rate. Please, guys, don't draw lines here because there's someone who's drawing lines on the screen. We made an investment with the last bank, and at the rate of 12% per annum.
Yes.
Now, guys, we were on the 1st of March, which is at the beginning of our current year. So we're going to multiply this 14,000 by 12%. How much do you get?
1,608.
1,608.
1,608. Yes. Okay, this interest, guys, that we have calculated is interest income or interest expense?
Interest
income.
It's interest income. We are going go straight to a trial balance under the income statement section. You see, guys, here, guys, we recorded how much? 840. But we're supposed to record how much? 1,680. When you minus, when you less 480, how much do you get, guys?
840.
You still get 840, and then how will you recognize this 840? Because this one is the interest income of 840, and then the different, how we're going to recognize this different, guys, because we're supposed to receive 1,680, but
isn't it accrued income?
Accrued
income.
Correct, is accrued income, guys. We are going to recognize the accrued income. And then she said the accrued income is going to be your asset, and the asset is increasing on the debit side. So we are going to credit what? The interest income. Let's go straight, guys, to your solution. You see, guys, how are you going to record this? Because this 840 to me is accrued income, is receivable, guys. To make this easier for you to understand. And then this, that is why I credit the interest income.
Okay.
Understood, guys?
Yes.
Can I continue?
Yes, you can.
Okay, let's continue, guys. No question on the additional information number 2. How did I calculate the interest income? Number 3, guys. Depreciation policy is as follow, guys. The vehicle at the straight line method with a residual, with a 10% residual value left and a lifespan of 5 years. Sorry, guys. Vehicle, we are going to use a straight line method with a 10% residual value and a lifespan of 5 years. Ne? And then the finisher and equipment at diminishing balance method at 20% per annum. Do you know how to calculate a depreciation, guys, using a residual value, guys? Anyone who can explain to me? I just want to know, guys, before I start with my calculation. Anyone who have an idea what is a residual value or how to use a residual value when are we calculating depreciation? No, anyone who want to try, guys?
Okay, I want to try. So I do not know the explanation, but I think we calculate it by taking the cost of each vehicle, which is 325,000. We multiply by 10%, and then divided by 100 and gets 3,250, which is the residual value.
Which is the residual value? Correct. The residual value is going to be 3,250, which is 10%. Is the 10%, ne? And then how are we going to use the residual value, guys? The residual value, we are going to take the cost, which is 330, which is 32,500.
Yes,
less
25,900.
the amount that you get, guys, is the depreciable value. Is the depreciable value, ne?
Okay.
And then how to use the lifespan, guys, on the when you calculate the depreciation, because you gave the useful life. Lifespan is the same as useful life of how many years? Of 5 years, ne? How are you going to use these 5 years, guys?
I'm sorry to take you back. Can you please repeat the part where you said where we calculate, how do we calculate the residual value? Can you please repeat that part on how to calculate the residual value?
Okay. Let's go back again to the additional information. The vehicle at the straight line method, ne, with 10% residual value. Sometimes they will give, sometimes you can be given a value, like, but here you have given a percentage. Ne? So we are going to take the cost of the vehicle from the trial balance on the balance sheet section, which is 32,500. 32,500 times 10%, how much do you get, guys?
3,250.
You get 3,250. Let me show here by my calculation. 10%, you get 3,250, guys. You get this. This amount, guys, is going to be what your residual value. This amount is going to be a residual value. And then to get the depreciable amount, guys, you're going to take this 32,000 500 less the residual value, guys. And then the amount that you get, is the depreciable value. Ne? And then how to use the lifespan to calculate the depreciable, the depreciation. We are going to take your depreciable amount divided by 5. The amount that you get is your depreciation. Ne? Let's go straight to our solution. If you can see here, guys, this is in brackets. Ne? How did I calculate this? I hope, guys, you saw how did I get the residual value. On your calculator, guys, you make a fraction. You take 32,500 less the residual value, divide by 5. You will get 55,850 is the depreciation for vehicle. Ne? So now, guys, we are going to calculate the depreciation of furniture and equipment. They say we are using a, what do we call, diminishing balance method. How to use a diminishing balance method, guys? Anyone? When we calculate depreciation using diminishing balance method, how are we going to calculate the depreciation? Hello, guys. Anyone? Please, guys. Let's. The more you try, the more we're gonna finish fast.
I think you're going to take the cost price minus the accumulated depreciation to get the carrying value, and then you multiply it by the 20% that they gave us and the lifespan, if I'm not mistaken.
100%. 100%. The diminishing balance method, guys, you are going to take the cost less accumulated depreciation times the rate. Ne? And then here, guys, the cost is how much? Is 25,000. And then how much is the accumulated depreciation? Is 9,000. 9,000. Ne? This 25,000, guys, minus 9,000, you still get the depreciable amount. Depreciable amount. And then times percentage, you get depreciation. Like this, guys. Let me put this in bracket. If I'm fast, guys, let me know so I can slow down. Ne?
Yes,
And then
slow
you get
down.
it. And then, chap. So, guys, we are going to credit accumulated depreciation. Ne? This plus this, guys, it gives me 950. That is why, guys, I credited accumulated depreciation. This accumulated depreciation is 5,850 plus 3,200. I get this. Yeah? And then our last adjustment, number 4, allowance for creditors' loss must be maintained at 4% of trade receivable, guys. Ne? How do we calculate the allowance for creditors' loss? Allowance for creditors' loss, guys. High school, we used to say provision for bad debts. Is the same as provision for bad debt. And creditors' loss, guys, is the same as bad debts. Do you get me?
Yes.
Hello? I need your participation, guys. Let's engage, guys.
Yes, we understand.
You understand, ne? Okay. Yeah, guys, I'm going to explain this slowly. Ne? Yeah, guys, we are going to up there on our trial balance. Ne? On our trial balance, guys. If you see here is trade receivable, ne? Which is 16,100. When you take 16,100 multiplied by 4%, how much do you get, guys? I want to show you something here. Times 4.
Sorry, please start again. The
Okay.
transaction number 4.
Transaction number 4. Ne? It says the allowance for credit loss. The allowance for credit loss must be maintained at 4% of trade receivable. Ne? Okay, let me continue. It says allowance for credit loss must be maintained at 4% of what? Trade receivable of these guys. Ne? And then when you multiply this by 4%, how much do you get, guys?
644.
644.
Yeah.
You get this, ne?
Mute. You go mute.
Please, guys, mute yourself. Mute yourself, guys. You get this, guys. And then here, down there, guys, we have a provision or allowance for credit for credit loss. Ne? We have this one, guys. Ne? Let me cancel this so we can have a space. Okay, we have this one, guys. We have 44. We have 644 net. And then down there, guys, at the beginning of the year, guys, we raised a allowance for credit loss. Ne? You know, guys, when you start a business, management, they will come up with a provision. Provision, guys, is like a budget. We expected to have this one, but actually, this year, when we calculate at the 4%, we get 644, which is lesser than this one that we have expected. This is the expected, guys, but the actual one is this. When you check the different, guys, do you think we gained or we lost? We expected to pay to raise this.
We gained.
We gained, ne? What is the difference between this one? 715 minus 644. 71, guys, which means we gained this. And then this 71, guys, please, we are going to use this 71, which means this 71, we are going to adjust our bad debts. Ne? How? We are going to decrease our bad debt with this 71, guys. Ne? And then on our general ledger, that is why we are going to see, we're going to credit our bad debts with what? With 71. Here, guys, is a bad debt, is a credit loss. We credited our credit loss with 71, and then we debited our allowance for credit loss. Here in the brackets, guys, are indicated as a provision for bad debts to make you guys to understand, because we exposed to this word high school, guys. Yeah.
Can I ask? Can I ask? Can you please explain? I didn't do accounting in high school, so I don't understand when you say allowance for credit loss. What do you mean by that? Can you please explain what do you mean by allowance for credit loss? For the company to come to a conclusion where they're gonna have allowances for credit loss, what happened? Can you please elaborate on that?
Okay, as a company, remember, guys, we are selling goods on credit. Ne? We sell goods on credit, and then as management, guys, we make an estimate. We estimate, okay, this year, since we have this much of debtors, we think we are going to have, we are going to raise a bad debts of, let me go top there. Let me go top there on the adjustment. Ne? Management, guys, they sat down and then they made an estimate, guys. This is a provision. Ne? It's just an estimate. Since we sold these goods on credit to customers, we think At the end of the year, we are going to raise, we are going to have a provision for bad debts of 17,500, 7,715, yeah? 715.
Yeah.
But when we calculate actually, now we have calculated at what? Let's go to adjustment. On the adjustment, they said the allowance for credit loss must be maintained at this.
Yes.
You see? And then as we raised what? This. When we calculate the actual one, it's different on what we have expected. You see? Which means as
Yes.
we did, let me use the simplest word, we budgeted more, but the actual one is less. You see? That is why I said
Okay.
again 71, and then we're going to adjust this 71 to where? To our bad debts. We're going to adjust here when we prepare what? The income statement. I hope guys explain this. Yeah? And then vice versa, guys. Vice versa. If this, it will make vice versa. Even vice versa, we are going to add where? On the bad debts. But now we are going to do what? To less the difference of 71 on your credit loss. Take it vice versa. Sometimes the actual can be higher than the expected. Ne? Even the journal entry is going to be vice versa. Are you okay, guys? Can I move?
Yes, you can.
Okay. 2.2, guys, prepare the statement of profit and loss and other comprehensive income for the year ended 28 February 2019. Yeah? 2019. We are going to prepare the what? The statement of profit and loss. Since we did the adjustment, guys, which means we are going to use our adjustment, and then we did the general ledger, which means we are going to focus on our general journal. We are going to focus on our general journal, and then on this section, income statement. Yeah? What is going to be our line item when we prepare the statement of profit and loss, guys? What do you put first? What are you going to put first, guys?
The cost of sales.
Someone say
Sales.
Okay.
It says.
Sales.
Sales, ne?
Sales.
Okay.
Yes.
Who agree with me, guys? Our entity, guys, we provide a service. We are not selling goods, we provide a service. Who agree with me, guys? Because we cannot put sales while our entity provide a service.
Service rendered.
Correct. Instead of saying sales, you are going to say service rendered. This one, guys, is going to be your first line item on your statement of profit and loss, which is service rendered is 27,000. And then the second line,
Cost of service.
what? Cost of service. Cost of service rendered minus cost of service. What do you get, guys?
Gross service.
Gross
profit.
Gross profit. Correct. You get a gross profit, guys. You're going to get the gross profit. Let me go down. Did you prepare, guys? Did you prepare this? Because if you didn't prepare, guys, it's going to be a problem. Yeah? Yeah, here, guys. We get this is the gross profit. You see, guys, how are you going to earn mark, guys? This is free. 1, 2, 3. Free mark. Ne? And then what is the next line item? What are we going to put Again, you must know the structure, guys.
Other income.
Other income.
Other operating income.
Other operating income. What are you going to put on other operating income? Since you are here, guys, on the trial balance.
And
Provision
income.
for bad debts.
Provision for
Investment.
any? And then here, guys,
Okay.
please, guys,
Discount received.
Discount received.
They made this for you to be easier for you, ne? You must also check these guys. You see? Discount.
Can I ask? So when you are writing, is it compulsory for us to indicate expense or income?
To indicate
that trading income, trading expense, is it compulsory?
No, it's not compulsory, but you must put your income statement in a correct structure.
Okay.
We cannot start with the cost of sales and then the second line item we say is a service rendered. You see, you must put.
Yes, I understand.
Yeah, correct. Here, guys, we're going to have a discount received as other income. Ne? We are going to put discount received as other income. Is here is only discount received. Ne? And then we are going to add with what is gross profit. It gives me what? Operating income. Ne? What is the next line item after operating income? The first one or the next?
Operating expenses.
Operating expenses. Ne? We are going straight operating expenses. Ne? Here, guys, what are you going to put under operating expenses, guys? What falls under operating expenses?
All the expenses.
Sorry?
Electricity,
All the expenses.
Okay, let's start from top to bottom. Ne? We're going to put advertising. Ne? Let me do this fast. Ne? We're going to put advertising, ne? And then we're going to put the credit loss. What did I say about the credit loss, guys? What are you going to do with this credit loss since we did adjustment?
You're recording in the other operating income.
And then what's supposed to do with this 750? No adjustment on this 750. Think of this, guys. Think of this. I said, guys, here we are going to less the 71 from the provision. Yeah? And then you get this. Is a mark, guys. 1, 2, 3. You see? And then we're going to take what the bank charges, guys. Here is the bank charges, and here is water and electricity, and here is motor expense. Here is a printing stationery, and then here, guys, we have what? Rent expense, guys. You see? What I'm going to do on this rent expense?
Minus 400.
Minus 400, guys. You still remember this 400? You see the rent expenses on the credit side. It indicates that we are going to less this 400 from where? From rent expense, like this. And then this amount, guys, is the way as it is on the trial balance, which there is no adjustment here. That is why copy and paste, copy and paste, copy and paste. You see, which means you are going to pass these, guys. I expect 80% from you to 100. And then water and electricity, the way it is and then telephone. What I left, guys? Everything is fine. Under operating expense. What should I put, guys? Because now I'm here. I put everything. What else should I put? Maybe I forgot to put. Huh? Depreciation, guys. We are going to put this depreciation at this amount. Ne? We are going to record the depreciation at this amount. Ne? Here is our depreciation. Ne? And then I'm going to add everything under operating expense. It gives me 22,574. Ne? And then operating income less the expenses, I get what, guys? Profit before interest, what? Income. Let me do this, guys. 840 plus 840. I forgot to record this, guys. You still remember how did I calculate this? Interest income, this interest income. You still remember? Yeah. Here, guys, I indicated like this is supposed to be added as is an accrued income. Yeah, and then it gives me this, and then this plus this, it gives me profit before interest expense, and then interest expense, guys, is given. Where's the interest expense, guys? Where did I get the interest expense? It's here. And then I let the interest expense, I get what? Profit for the year. And then I'm done. Any question? Any question before I hand over to Precious?
Sir.
I will
Hello,
take.
sir.
Hello.
So for provision for bad debt, so if there's an adjustment, don't we record it on the other operating income? Then there's an adjustment.
Repeat again. I can't hear you. What's your question again? We have only 10 minutes, guys, and then Precious will continue with doing the balance sheet with you guys.
So for provision for bad debts, there's an adjustment. We are, and then don't we record it on the other operating income?
No, we don't. This 71, this 71, no, we don't. Please, guys, don't record this 71 under other operating income. Here, guys, we adjust these two bad debts instead of recording this on other operating income. Don't do that. Ne? You adjust where to bad debt. Even me, guys, high school, we used to. I still remember, guys, because I remember I was fighting with my friend, like how this is supposed to be, and then until my tutor tell me, no, here we adjust these two bad debts. That is why under bad debt, I left this one, this 71 rand. Are you okay?
So, sir, if there's an adjustment like that, so we always record it on the other expense. So if there is like a adjustment like this one, so provision for bad debts, do we always record it into the other operating expenses?
Okay, Precious, you can continue.
Can we, because it's like 7 minutes remaining, can you guys leave, or can you please end the session, and then we'll rejoin again, and then